Welcome to Talk Tickers. Today, we're digging into LightPath Technologies' Q1 results. The stock got a nice pop after the report, and for a very good reason. You see, this isn't just about a simple quarterly bait. It's about a fundamental business transformation that the market is just now starting to wake up to. All right, let's get right to the headline number because it's a big one. LightPath pulled in a record $15.1 million in revenue. And listen, this wasn't just a tiny beat. We're talking a massive 79% jump year over year. They absolutely smashed consensus expectations by almost 20%. Just incredible. And when you zoom out and look at the whole picture, the strength was just everywhere. I mean, this was not just a top-line story, not by a long shot. They beat on EPS, they got their adjusted EBITDA back into positive territory, and this is the really big one, they ended the quarter with a backlog that's literally quadrupled from a year ago. That right there is a huge signal of massive demand coming down the pike. But, the numbers are great, but they really only tell half the story here. The really crucial thing to understand is the massive transformation happening inside this company. That's the part that's really got investors buzzing. And the CEO, Sam Rubin, he just nailed it on the earnings call. He said the company is at an inflection point. After years of grinding away, all that disciplined work is finally paying off in a big way. You can see it in the numbers. So what is this shift? Well, it's all about climbing up the value chain. Think about it this way. They're going from selling simple, low-margin parts to being a full-on partner that delivers high-value, complete imaging systems. That's the whole game right there. It's a total transformation of the business model. And you don't have to take my word for it. The proof is right here in the revenue mix. Just look at this. Their high-value stuff, assemblies of modules, that's now their biggest business, making up 39% of all their revenue. And get this, that part of the business grew by a mind-blowing 436% year over year. I mean, if that's not an inflection point in action, I don't know what is. So what's the engine driving all this? It's this stuff called BlackDiamond glass. This is their secret sauce, their key differentiator. You see, it's a US-based, totally secure alternative to germanium, which, as you probably know, is mostly controlled by China. So for their big defense and industrial customers, this is huge. It's not just a piece of glass, it's a way to secure their entire supply chain. That's a massive strategic advantage. Okay, let's pivot and talk about the backlog because this really quantifies the opportunity ahead. This is where the story gets really compelling for the future. So they're walking out of the quarter with a backlog of around $90 million. And just to put that number in perspective for you, that is more than 4 times what it was a year ago. It's basically more than a full year of revenue just sitting there, waiting to be delivered based on their current pace. And this isn't just a bunch of small one-off orders. No, this backlog is anchored by huge multi-year defense programs. We're talking more than $15 million just for counter-drone systems. A huge opportunity in border surveillance, but the real potential game changer here is the next generation Stinger missile replacement program they're working on with Lockheed Martin. I mean, if LightPath gets selected as a key supplier for that, we could be looking at a $50 to $100 million annual revenue stream just from that one program. So when you look ahead, the path forward is pretty clear. Over the next few quarters, what everyone's going to be watching is how fast they can turn that giant backlog into actual revenue. But the big event on the horizon is that potential down selection for the Stinger replacement program. That's basically when the government picks its final team. If they get the nod, wow, that would be a huge de-risking event for this stock. All right, so let's put it all together. What does this all mean for the stock going forward? This is the next call, where we take all this data and build an investment thesis. Okay, so here's our take. We absolutely expect this revenue momentum to keep going. Management even said on the call that they're aiming to do it all again in Q2, and that massive backlog gives them incredible visibility. So the risk isn't about demand anymore. That's a solved problem for now. The new risk, the new challenge, is all about execution. Can they actually scale a production to handle a backlog that's 4x bigger and at the same time push their gross margins up from 30% towards that 35% target? That's the key question now. So when you add it all up, you have a successful pivot to high-value systems, you have this insane acceleration in revenue growth, and you have crystal clear visibility into future demand from these huge defense programs. For us, that all points to one thing. Our rating on LightPath Technologies is outperform. The inflection point is real, it's happening right now, and we think the market is just starting to catch on. This is not financial advice.